Welcome to The Explainer. This week, we are diving headfirst into crypto's crazy tug of war. On one side, you've got this incredible optimism, and on the other, well, a whole lot of anxiety. The market is literally being pulled in two different directions, and we're going to figure out why. You know that old saying, 2 steps forward, 1 step back? Well, that pretty much sums up the last 7 days in crypto perfectly. We saw these amazing surges, these big wins for major assets, only to see the market get nervous and pull right back. It's some serious market whiplash. So what's really going on here? What's driving all this volatility? It really boils down to two huge, powerful forces that are clashing against each other in real time. Okay, so on one hand, you've got this massive sense of hope. Investors are almost certain the U.S. Federal Reserve is going to cut interest rates, and that usually means more money in the economy, which is fantastic for assets like crypto. But then, pulling in the complete opposite direction, you've got fear, serious fear, sparked by things like U.S.-China trade tensions and a government shutdown that's making everyone nervous about the economy. And you can literally see this battle playing out with the big players. We saw Bitcoin absolutely smash past the $11,000, $13,000 mark. Ether reclaimed that key $4,000 level. But then, just like that, the fear kicked in, and both of them were treated from those highs. It's a perfect example of the market split personality right now. And if you want a perfect picture of this mood swing, just look at the money flowing into U.S. spot Bitcoin ETFs. These are the funds that hold actual Bitcoin. After seeing a massive outflow of $1.2 billion the week before, this week it completely flipped. Almost $500 million came flooding right back in. That is a wild swing in sentiment in such a short period of time. Okay, so with all this short-term chaos, it's easy to get lost in the noise. But that's exactly why we need to zoom out and look at the bigger picture. Because while the prices are bouncing around, the slow and steady march of global regulation is picking up serious speed. Major economies aren't just watching anymore, they're getting in the game. Check this out. Over in Japan, something really fascinating is happening. The top financial regulator is actually thinking about letting traditional banks hold, trade, and even become crypto exchanges themselves. I mean, that would be a total game changer, weaving crypto right into the fabric of the traditional banking system. And it's not just Japan. Hong Kong just hit a huge milestone. They approved Asia's first ever spot Solana ETF. This is a big deal because it shows regulated products are expanding beyond just Bitcoin and Ether. Plus, letting it trade in multiple currencies just opens the door to way more investors. Meanwhile, the UK market is getting in on the action too. BlackRock's Bitcoin product is now officially trading on the London Stock Exchange. This is huge for everyday investors in the UK, giving them a simple, regulated way to get exposure to Bitcoin without having to worry about all the complicated techie stuff of holding it themselves. And this one might surprise you. Back in the US, we're seeing a global tech giant, Sony, of all companies, jumping into the crypto banking world. Their subsidiary is looking to offer crypto services and even launch its own stablecoin backed by the US dollar. That's a massive household name stepping into the ring. All right, so if we look past all the daily price swings and the headlines, there are some really powerful trends shaping the future of this whole space. Let's dig into what's happening just under the surface. Okay, get ready for this number. $1 billion. That's right, a billion with a B. That is the absolutely staggering amount that Ripple Labs is raising for a fund that's all about building out its XRP ecosystem. A move like this isn't just a headline, it's a massive bet on the long-term future of their technology. You know, another really interesting thing we're seeing is a shift in how investors are thinking. It feels like the market is starting to grow up a little bit. The focus seems to be moving away from just pure hype and speculation and more towards, actual real value. This table right here, it tells the whole story. Let's look at what's called the NAV premium. Basically, it's a measure of hype. How much more people are willing to pay for a company's stock versus the actual crypto it holds. Earlier this year, a company like Metaplanet was trading at 10 times the value of the Bitcoin it owned. That was pure hype. And now, that premium has pretty much disappeared. Investors are getting way smarter. And maybe the biggest story of all is how these two worlds, decentralized finance or DeFi and traditional finance, are starting to collide in a good way. We're seeing projections for tokenized real estate to become a multi-trillion-dollar market. Giants like BlackRock are building the plumbing for crypto, and major DeFi platforms are expanding. The walls are definitely coming down. Okay, so that's a lot to take in. The big question is, what does this all mean for you? With so much happening, from new products to new risks, it's absolutely crucial to have the right tools to stay informed and, most importantly, stay safe.
First things first, let's get a handle on some of these new products you're going to be hearing more about. With Ripple making big moves, you might be wondering, what the heck is an XRP ETF? Well, to put it simply, it's a way for you to invest in the price of XRP using a regular stock exchange without ever having to buy the token directly.
So why is this a big deal? Well, it really comes down to making things simple and secure, especially if you're not a crypto expert. You just buy a share like you would for any other company. A professional, regulated company handles holding the actual XRP, and the share price just follows the market price. It's all about making crypto more accessible to everyone. But here's the catch. Whenever something gets easier and more popular, it unfortunately attracts the wrong kind of attention. This headline right here about a massive crypto scam bust in the UK is a tough reminder that as the industry grows, so do the risks. Real people lost millions to these fake promises.
So you gotta stay sharp. How do you protect your funds? It really boils down to 3 simple but absolutely crucial steps. 1. Be skeptical. If something guarantees a profit or sounds way too good to be true, it probably is. 2. Verify everything. Do your own research before you even think about sending money. And 3. Report it. If something seems fishy, let the authorities know.
And all of this brings us to one final big question to chew on. On one hand, you've got this wild, volatile market. On the other, you have this steady drumbeat of regulation and big institutions getting involved. So, the real question is this: are we watching the end of crypto's chaotic Wild West days and the beginning of a whole new, more stable chapter? It's definitely something to think about. Thanks for joining us.